this week, the year's GDP is at a decade's low as hopes of rate cuts dampen. The Sensex crashes 450 points on Friday. Auto companies post better than expected numbers. Will pick out the best bets for you, and Prakash Dhawan reviews his portfolio. Welcome to All About Stocks. You're watching ET Now. This is a show specifically meant for long-term retail equity investors. If you've been busy at work all week, don't worry. We've been tracking the market for you. We've done the research and we've picked the stocks. We have all of the information you need. It was quite a heavy week, especially on Friday. We had numbers on the fiscal deficit, on the GDP. The GDP numbers disappointed the market. The market went on to crash 450 points on the Sensex. What does this mean for your portfolio, and what should you do now? We're going to find out all of that in the next half hour. We'll also take a very close look at the auto sector. Remember, you can send in questions to the email ID that's at the bottom of your screen, and you can also reach us on our Facebook page. Before I go any further, let me bring in Avan, who has the latest numbers on the market. She also has the information on the fiscal deficit and our rupee that just wouldn't stop falling this week. Avan.
Well, what a week it's been for the equity markets. We've had to digest very volatile Asian markets. There's been macroeconomic data, the fag end of the earnings season, the expiry, as well as volatility for the currency. So after all the give and take, it's been absolutely flat for the frontline indices, up by just about 1/3%, largely owing to the sell-off that we witnessed on Friday. You had the GDP numbers for the fourth quarter coming out at 4.8%, below the crucial 5% mark. It did improve sequentially, but the FY13 GDP at 5% is the lowest in a decade. What perhaps could be seen as a silver lining would have to be the FY13 fiscal deficit, according to government sources, at 4.9% versus the aim of 5.2%, and sources indicating that the government's cash position remains rather comfortable. It was exceedingly volatile for the currency, and in fact the rupee touched a fresh 11-month low on Friday, down over 5% in the month of May, being the worst performing Asian currency on a 1-month basis. Well, you had big results coming out this week, but for the next week, watch out for the overall updates on the monsoon. The agriculture-based economy like India's, we understand that it is likely to hit the coast of Kerala by the 2nd of June, so that should hopefully be digested as a positive.
All right, Avan, thank you for that information. Joining us now in the studio is Prakash Dhawan, Chief Portfolio Strategist at Wealth Circle. Prakash, thank you so much for joining us on a week like this. We had really positive days at the beginning of the week. We wiped out those gains completely by the end. 450 points on the Sensex on Friday alone. What does this mean? There was a lot of information that came out on Friday. There was positive information on fiscal deficit that have been hanging over us for months. We've been talking about it since the budget, and that came out positive, but there was no impact of that on the market. It's likely now that we might not see a rate cut. Explain to us what all of this means for our stock portfolio.
Well, the fall on Friday was, as you rightly said, quite sudden, quite unexpected, and quite precipitated. I mean, 450 points is something that takes a whole week or maybe a couple of weeks to grow, and losing that. But as I said, there are a lot of factors that kind of converged towards the end of the week, and particularly the currency is what spooked the market. If people have been observing the fact that vis-a-vis the dollar, the rupee has been losing ground dramatically. In fact, for the entire month of May, I believe it's about 5%, which is significant for a currency as large as ours. And which means that there's something wrong in terms of, in spite of inflows, if you're losing on the currency, it could only worsen things on the macro level. The next question which people are going to ask come next week is going to be whether we are in for another downgrade. And if that, that has just gone by, we just kind of scraped through that situation. And if that were to happen, it's going to create more nervousness. So for retail investors, it's important that they realize that it's convergence of negative news flow that's probably brought this up. But this is not some downward slide that they need to be extremely worried about. Indices do behave like this, especially when run-ups have been sharp. But they need to look at stock-specific activity. They need to look at their portfolio and rebalance them in these times. But don't panic as usual.
So what are you expecting over the course of next week? While this information is being digested over the weekend, when we open on Monday morning, do you expect further cuts in our market? Is this something that might stop by the end of next week, or is it going to go on further?
No, valid question. I mean, whether this is a start of a series of a few days or just one-off. I think Monday, Tuesday, probably the first half could be slightly, weak in terms of the overhang. And remember, you have this OFS deadline that's coming close. There's a huge supply of paper that's likely to be in the market. And people do tend to make way for, that opportunity to buy into stocks which are available at discount, particularly some of the MNCs that are on OFS. So I think it's a reaction from that side as well. So you could probably see markets weak on Monday, Tuesday, sideways probably on Wednesday, but I don't think the entire week's going to be very negative.
All right. I'm also going to ask my producer at this point to just pull up the bank Nifty. We'll also look at HDFC, SBI, those big banks that we've been keeping an eye on. HDFC Bank there on your screen. All of them took a drastic beating on Friday while the market cut about 450 points on the Sensex. Now, we've been talking about the fact that private banks hold a lot of value. Obviously, the beating that we took on Friday was because the market no longer sees the possibility of a rate cut from the RBI. Should we at this point be buying more private banks, or do you think this is something we should stay away from?
No, I think it depends on your horizon. If you're looking at a tactical move, which is just the next couple of weeks, maybe you may not have. You could go ahead buy once the slide completes itself in the next couple of weeks.
Let's assume that everybody watching is a long-term.
Oh, for long-term investors, definitely. I mean, an HDFC at these rates. Is an opportunity. What's happened is the interest rate cut, which was imminently expected, has got deferred, which means some of the borrowers from most of these banks might not be in such an easy position to repay as quickly or as comfortably as they would have been if the rate cut had happened. Now, if the rate cut doesn't happen, it only means that the borrowers are going to take longer to repay, which doesn't mean that, banks are going belly up, things are really worse, but it just means the pain extends a bit. So I think these are opportunities to buy, particularly some of the private sector banks which have come up with decent numbers but have not run up.
Is the same true for the infrastructure sector? Again, it's going to be disappointed in the fact that those rates are not going to come down. Yeah. Raising capital is going to continue to be expensive. Infrastructure, real estate. What happens to these sectors? Should we be staying away from them?
Absolutely. See, the infrastructure sector or the realty sector for that matter, gets impacted directly because of interest rates, whereas banking is an indirect, mechanism to get impacted. Infrastructure depends a lot on the government's ability to spend, and until that happens, and very clearly the fiscal deficit numbers tell you that the government has managed these pretty looking numbers because of expenditure management and not because of true revenue generation. We've not had tax increases, we've not had robust tax collections. So the receipts are not so robust, and that means that inhibits or limits the government's ability to spend. And if that doesn't happen,
so to put it simply for our viewers, it basically means that we haven't actually earned more money this year. We've just become really tight-fisted, and which is why we're left with more in the palm of our hands. But that's not a good thing.
That's not a good thing. You actually shrink your balance sheet size. So it's like, I earn less, I spend less, and I feel good that I still manage to do it. But you lower your balance sheet size, the lifestyle, whatever it takes. So the government has realized that. I remember the finance minister acknowledging that in a very direct way this time, that we need to focus on revenue generation now onwards. And if that happens, and as and when that happens, probably infrastructure should be a good buy.
Okay, as and when that happens. There were a couple of pieces of good news that came out this week that unfortunately took a backseat to all of the bad news that we heard. As we said, the fiscal deficit did come down lower. Monsoons have been expected to be early and expected to be normal, which means that we are expecting normal rains across the country, which is a good thing for an agricultural country like ours. In terms of stocks to invest in, is this a positive thing? How are you reading it?
Over the years, we've kind of started getting ourselves decoupled with the agrarian thing to quite an extent. We have services contributing so much. But yes, from a consumption perspective, it does make a big difference. Good monsoon means more money in the hands of rural, consumers, which means more spend on FMCG products, consumer durables, vehicles. So, the cycle actually turns favorable because last year was pretty bad in terms of money flow. And if the monsoon is as good as what we are expecting, I think it could be a savior of sorts.
All right. So before we move on from this particular conversation, I want you to give us two ideas right now. One within the banks that's holding good value because of the cut on Friday, and one that would profit from the possible normal monsoon that we're looking at and will profit from more money in the rural areas. Give us two ideas that we can use on Monday morning.
Absolutely. And, given the fact that you want to play it safer, you stick to large caps because it's still not the right time to pick mid-cap. So from the banking side, I think ICICI Bank definitely is a very good buy. The numbers have been very impressive, but somehow the street has probably not been in the mood to...
Do you have a long-term target with ICICI Bank right now?
I would expect that within the next 12 months, maybe even earlier, let's say March FY14, it should be about 1380, 1450. That's the zone it should ideally be in.
And in the FMCG sector?
I wouldn't go for FMCG as much, but M&M looks absolutely promising. I mean, good monsoon means the tractor sales definitely are here to contribute. So whatever slowdown you have on the other segments would be better. And the numbers will definitely validate that.
Alright, target on M&M?
Now it should be in the range of around 1180.
Okay. Mahindra & Mahindra and ICICI Bank are two options that you can look at this moment. It's time to move on to our portfolio question. Now, every week we look at the portfolio of two lucky viewers on this show. Rajendra is our first viewer. Now, he tells us he's worried about these shares because they're currently raking in some losses. The first on his list is Bharat Forge, which he bought at 293 rupees. Should he continue holding on to this stock?
So it'll take some time for it to at least move back in that 300 neighborhood at which this gentleman is bought in. Primarily, it's a reflection of the slowdown in the global automotive segment. But I don't think he needs to be so worried or write it off. Just a little bit of more patience, maybe another 6 months, and things would look much brighter for this stock.
There is 155 shares of BHEL bought at 385 rupees. Prakash, I do believe that the retail investor is losing patience with BHEL. What should he do now?
No, I agree. I mean, this is almost halved from what he's bought into. A great company, was always very promising. But as you said earlier, it's related to the, the capital goods cycle and stuff like that. But again, he could probably average out whenever the stock moves in that 180, 185 zone, which probably is not far off from where it is. And then probably, it will be easier for him to move out at a profit. But he needs to average this out. Otherwise, 400 is not happening too soon.
He also has Voltas, which he bought at 100 rupees. Now, this company is really disappointed. Its net profit was down 90% this quarter. Should he hold on to that stock?
Well, he's about 17% off his purchase price, which is significant in percentage terms. But since the quantity is not so significant, I would probably recommend he books a loss and keeps the money in cash, holds on to the cash to invest into some of the good ideas that we keep on discussing.
I can see how this portfolio might be disappointing. Abana Offshore bought at 475 rupees. Abana ended the week at 295. There have been plans to raise some funds for that company, but is that enough to possibly bring it back to where he hopes to see it?
Not at all. I mean, this is a high beta stock, can disappoint majorly, can surprise positively at times, but I believe every time there's positive momentum in the market, people need to get out irrespective whether it meets their target price or their purchase price. Maybe the next round up move from here on could probably give him an exit. So he could probably exit at a level of about 370, 360.
Alright, exit that one. And last stock on his list is actually making a profit. This is a good one. This is Hindustan Unilever, which he bought at 462. The stock ended the week at 592. Obviously hold on to it, well?
Yeah, I mean, I think the only reason I should be worried is only 100 shares and not more. Because the buyback itself is at 600 starting off in the third week of June. So he's fairly in the money in this and he could probably continue holding on.
We're going to take a very quick break. If you'd like your portfolio looked at, send it to us in the email ID that's at the bottom of your screen. On the other side of this break, we'll review Prakash's portfolio. We'll also tell you which stock to bet on in the auto sector. Don't go anywhere. You're watching All About Stocks on ET Now. Thank you so much for staying with us. Prakash Devan is still with us in the studio, helping us through this rather tough week through the market. Now, for those of you who watch the show on a regular basis, you know that Prakash designed a portfolio for us. This portfolio was designed in November last year. We've been tracking it ever since then. Right now, given the week that we've had as well, the portfolio is currently in an overall loss of nearly 10%. At the same time,
The Nifty has given us a return of 1.8%, which means it is underperforming the Nifty. I'm going to give you a list of the stocks that Prakash has recommended for us, and then we'll talk to him about why he put this stock list together. There's Oriental Bank of Commerce, Tata Steel, Mahindra Satyam, Kane, Cipla, Coal India, ITC, and M&M. Tata Steel and Oriental Bank of Commerce are down a little over 25% since we invested in this portfolio. Does that make you nervous? Do you think it's time to maybe give up hope on these companies, or in terms of a long-term view, are you still bullish?
No, had the underlying business not been very robust, I would have probably already booked a loss and exited. But what really gives me a little bit of conviction to be patient enough is both of them have very strong pedigree. They're going through a cyclical downturn of sorts, whether it's metals or whether it's PSU banks. They're out of favor for whatever reasons. So, you would probably see, if you were to benchmark these not against the Nifty but their respective indices, they might not have underperformed so much. So, as a sector, both these sectors haven't contributed much, and I think that's the reason why you see commensurate with the Nifty, they're dramatically low. But I would definitely continue holding on for some more time.
And hold on for more time. Let's talk about Coal India. We've heard a lot of news now about a coal regulator also. Give us your view on Coal India, even for the rest of our viewers who have this stock. What's going to happen to it in the long term?
Ideally, this is a business that should be very promising. Energy, we're always energy starved, and
it is a monopoly within that space.
But it's frustrating that Coal India hasn't delivered. I myself have this as part of the portfolio all the time, but it's not kind of the price action somehow for reasons that are more market related. And when I say market related, it's just the limited floating stock that's available in the market. So the behavior of the stock tends to get monopolized or influenced by some of the large investors. And every time it reaches a particular level where it starts moving up, you see a lot of selling pressure come in. There's so much of supply that comes in because people have been holding on large quantities of the stock since the IPO. So I think till that mismatch is kind of over, I don't think the price is going to deliver in terms of rewards to investors. But the underlying business is probably much stronger than Tata Steel.
When do you expect that to happen?
I think it's overdone. It's overdue. It should have happened much earlier. But as you said, the steps that now you hear about, at least do give you some indication that things could move in the right direction. And as and when the results fructify, which could probably be another 6 months, or at least before the next elections.
All right, the stock that has done really well for us is ITC in this portfolio. You did talk about M&M, that's also performing well for us. But ITC in particular, what's your view going forward? For those of our viewers who don't have ITC in their portfolio, should they be picking it up now at these levels?
At, market corrections the way you saw last week, Friday, ideal time to get into some of your chosen stocks. Make this list, keep it all the time with you. Every time the stocks go down, you buy them. ITC would continue doing well for the simple reason that it's now turning out to be a much larger FMCG player than just cigarettes. You have food which has started actively, positively contributing to its balance sheet, which I think if you look at the way Britannia has grown, ITC would do much better with its Sunfeast foray into the food business, particularly the biscuits business. And I think in terms of headroom, it's got enough for at least another 80-100 rupees in the next 1 year.
I'm going to give you a recap of the portfolio that Prakash has designed for us. Oriental Bank of Commerce, Tata Steel, Mahindra Satyam, Kane, Cipla, Coal India, ITC, and M&M. The portfolio has given us a loss right now of about 10%, but remember this is a long-term portfolio, so we'll be tracking it for the next 3 to 4 years at least, and Prakash is confident that those stocks will recover, so we're not making any changes right now. We have a question that's come in from Venkatesh. Now, he has 50 shares of Maruti Suzuki bought at, believe it or not, 125 rupees. He also has Ashok Leyland, which he bought at about 8 rupees. He wants to know if he should be booking partial profits. He's making a very, very handsome return on Maruti. We've had some labor trouble again for Maruti, but given the kind of returns he has made, should he be booking some profits right now?
So, Maruti is probably a story that's ripened enough, you can probably book profits out of. I don't see it moving to 2,500 in a hurry, whereas Ashok Leyland has just started moving into the mid-20s. And given the fact that the CV segment is the first one that would take off once the economy picks up, I believe, especially with those mining bans taking off and stuff like that, you will have that traction come into the CV segment. And Ashok Leyland has a balance sheet that could do very well with interest rate cuts.
Numbers were disappointing, though.
Numbers were disappointing, but I think that's the opportunity. You look at post the numbers, there's one day when the stock actually came down, and thereafter it's just been moving up. of course, gradually, it's not kind of risen very sharply, but I still feel Ashok Leyland is a great story. It's a turnaround in the making, fractured balance sheet, giving way to much more healthier cash flows. But Maruti could probably book profit. And they're multi-baggers for him. Like 125 to 1800, 1600. I mean, of course, he's waited for 10 years.
Profits at this point or partially?
He could probably move out of Maruti completely, if you ask me. Because, to expect a stock to do so well beyond this, in 10 years, he's probably bought it, 125 was IPO price, which was May of 2002. and that's quite a long period.
Alright, so you have done well on Maruti. It makes sense to book profits right now. Continue to hold on to Ashok Leyland. I want to talk to you about the rest of the auto sector since we're talking about it. Let's talk about Mahindra & Mahindra and those numbers that came out. Let's talk about Tata Motors. Now, within the two-wheeler stocks as well, where do you see value going forward, especially given what we talked about in terms of monsoon, in terms of rural demand? Is there value in the two-wheeler segment as well?
Absolutely. In fact, if you look at the mismatch that the market has created for itself between Bajaj and Hero MotoCorp, Hero MotoCorp has enough headroom to catch up. I mean, they cannot be so diverse once sales start kind of, reaching an equilibrium. And my sense is June and July numbers very clearly will validate the fact that Hero MotoCorp is coming back in terms of market share. So, and Bajaj will have a little bit of a sideways movement because it's getting into a flux with this RE60 and, there's a lot of variables which are uncertain. But Hero MotoCorp definitely will outperform.
Alright, so within the four-wheelers, Mahindra & Mahindra is your pick right now. And between the two-wheelers, you say Hero MotoCorp?
Hero MotoCorp.
Hero MotoCorp. Alright, we'll take a very quick break. On the other side, we'll talk about Franco, Tata Global Beverages and HDIL. Don't go anywhere. Back, you're watching All About Stocks on ET Now. Thank you for staying with us. Prakash Diwan is with us as well. A quick recap for those of you who just joined in. We've had a rough week at the markets. The Sensex is down about 450 points on Friday. Let's take a look at Prakash's report card. Now, when Prakash was on this show in May 2012, he recommended Sanco when it was trading at 66 with a target of 145 in 1 year. Prakash, I think it's safe to say the stock missed the target.
No, absolutely. This has been a disaster. I mean, it's not just and a significant erosion of wealth for anybody who would have believed in this stock at that point in time. But what happens at times is the businesses undergo such rapid change, which is not something that happens over a period of time, and it's so sudden that you're actually quite unaware. And this was a company that held so much promise at that point in time because it was into the Aadhaar business and servicing government programs, and they've just not taken off.
So for those of our viewers who have the stock right now, is there anything in the pipeline that might offer some sort of respite within this company, or is it time to give up?
Now that it's under 10 rupees, it really doesn't fetch much. If you have the gumption to continue holding it on and hope something happens in terms of a revival, or the company gets mutated into something else. But I'm not saying that's likely. Don't take that as a
possibility. It might languish at these levels for a very long time.
It might, because there could be no takers for a long time. But then companies do tend to revive themselves for, especially if they've not gone. There's been no untoward incident with this company. No corporate governance issues, of that sort. But it's just the business model just didn't work.
That's a call that did not work on this show. We have one last portfolio question to look at. Ahmed has written in. He has the following stocks in his portfolio. Should he be holding on to it or selling? Gammon India bought at about 40 rupees. Again, that stock is down below 20 this week. What should he be doing with that stock?
I think there's enough confusion, there are enough labor issues with this company. The numbers have really not been encouraging. It's time to move out because, again, infrastructure is not happening so soon. It might take much longer to revive. Use the money somewhere else.
Tata Global Beverages bought at 155 rupees. It is a promising company, isn't it?
The way the Starbucks venture has taken off, there's much more that you could see from this company, and he'll definitely be rewarded handsomely if he holds on.
He also has HDIL, which he bought at 75 rupees. Now, we know Mumbai Airport just cancelled the HDIL slum redevelopment pact. Should he be holding on to that stock given the trouble that it's had?
I think this is a tough one. You need to get out because, to be honest, that was a flagship, business for this entire company. There's a lot riding on it, and once that's been taken off, you really don't know where this company could kind of find itself in terms of cash flows. So I would recommend an exit, even if it's a significant loss.
The 400 shares of Sri Renuka Sugars bought at 26 rupees. Hold on to that.
Yeah, here too he's probably losing out about 20%, but I'm slightly positive on sugar. It's a contract call. If he's patient enough, he'll probably get value out of this acquisition also.
And lastly, GVK Power and Infra. We talked about infrastructure companies. It's going to be a while before we see a revival. He bought this stock at 15 rupees. Should he hold on to it?
Again, you could really average out this one because this has the potential to move back into at least that 15 rupee zone. It's really not too much to ask for. So if you were to average out at these levels, possibly yes, it makes sense.
All right, that's a wrap on this show. Prakash, thank you so much for spending time with us and answering all of those questions. Keep sending us stock queries. The email ID is at the bottom of your screen. You can also find a copy of this show on our Facebook page. Thanks for watching.